Welcome to the Always On podcast. I'm your host, Duncan MacPherson, and on this podcast, our objective is to empower our audience, which are very high caliber, fee-for-service professionals, to always be working on their business and on themselves. On today's podcast, I had a great conversation with Brad Johnson. Brad is the co-founder of Triad Partners. He's the host of the Do Business, Do Life podcast, a thought leader in the industry, very thoughtful guy. In this episode, we talked about the importance of innovation in the financial services space, looking down the road at demographic forces. We talked about being balanced in business and in life. We covered a lot of ground. I hope you enjoy it. And if you do, please like and share. Tell your colleagues. If you have any ideas for themes you'd like to hear on this podcast down the road, just let us know. Thanks for listening. Well, I just know this is going to be a great conversation. Very fortunate to have Brad Johnson on the Always On podcast. Brad is very well known in the financial services space. He's developed a great reputation as a thought leader, very innovative, and very thoughtful in terms of what separates the best financial professionals from the rest. So, Brad, welcome to Always On. Thank you.
Glad to be here, Duncan. Thanks for having me on.
Pleasure. So there's a couple things I know about you. Number one, you live in Kansas City, and I've been there many times. A disproportionate number of financial services people reside in Kansas City, and you also have world-class barbecue. So give us a little backstory on that.
Well, our home office is just a little west of Kansas City. So we're in Lawrence, Kansas, so about 20 minutes outside. For the first point, it is wild how many large wealth management firms are in kind of the Kansas City, Topeka, Lawrence area. You know, some of the better known Creative Planning, Meritor, some of the larger asset managers. And hey, well, we're getting there. You know, we're over $1 billion on our way to 2, hope to soon be at 3. But I think there is a little superpower. You know, you're Canadian, Duncan. My running joke with all my Canadian friends is I've never met a Canadian I don't like. You're just all nice. And I think that's a little bit of the Midwest. They call it Midwest nice, I guess is a new term. Yeah. But I think, you know, growing up in a small town, which I did, Minneapolis, Kansas, town of 2,000 people, there's a little bit of the golden rule that's just in your DNA. Treat others as you want to be treated, because if you don't, everybody in town knows about it because everybody knows everybody. And I think a little bit of that Midwest, a lot of Kansas is a lot of small towns. It's about relationships. It's about doing what you say you're going to do, being your word. And I think that plays out really well in the world of finance and relationships, because that is the driver. These are big money decisions. You have to have a high level of trust. And so I like to think that probably plays a little bit into how some of these larger wealth management firms have grown up in the Midwest.
Yeah, I couldn't agree.
And we have good barbecue. We
Yeah.
do have good barbecue.
Yeah, no, I agree with everything you said. And yes, the barbecue is exceptional. I remember vividly the first time I had barbecue in KC was with Steve Phillips and the crew.
Yeah.
And I was shocked. Like, I thought, okay, this is real barbecue. The other thing, and correct me if I'm wrong, I believe you started in the financial services space in 2007, which speaks to your impeccable timing, because obviously the world got a little weird soon after that. But, you know, it's interesting. The people I know who started or in this business around that time, there's a commonality, and that is incredible resilience and grit, because I'm sure you had some doubts in 08 and 09 when things were just absolutely bizarre. But as I often say, there's meaning in the struggle. And my favorite analogy, I live right near a couple of vineyards, and a good vineyard manager will tell you that if you want to grow really strong vines, comfort is the enemy, which means basically deprive the vines of water, make them struggle, make them reach, make them go look for it. And that's a great metaphor in business, because successful, sustainable, humble professionals take nothing for granted, especially when they look back at the adversity that they overcame. So what was that like for you, just from your perspective?
You know, one of the things we have a saying in our family of I'm married, I have 3 kids, and we say Johnsons get uncomfortable and do hard things. And that's where the growth comes from. And so that has been a mantra that I've tried to instill into my kids at a young age. I grew up on a farm, was throwing hay bales in the summertime, all pigs, driving a combine. So I look back, I didn't enjoy it during going through it, but I look back now and it instilled a work ethic into me and the ability like, hey, there's a lot of work to do. You can get it done. Just chip away at it. And I think that's just a good characteristic for anybody that wants to go do something that matters in life. And back to, it's interesting, my entry into finance back in 2007, right before the Great Recession hit, was on the insurance side of the business. So I remember my mom called me when the sky was falling. You had firms literally that had been around for hundreds of years that were non-existent, Lehman Brothers, those sort of firms. And I remember she said, "You can be okay. Do you have a job?" And I'm like, "Mom, we're having our best year ever." Because we were selling annuities for retirees that basically had downside protection. And so there was a flood to safety. In fact, actually, this little picture I'm in the background talks about greed buy at the top, fear sell at the bottom. Those human psychology, those dynamics play out. And so there was a massive flood to safety. And we were in the world of insurance and safety. So we actually had a booming business in 08, 09, some of our biggest growth years. But as things evolved in finance, and today at Triad, we have insurance brokerage, we have wealth management. What I found back to financial planning, you have to have diversification, for both the up years, the down years, the sideways years. And so what I learned early on is having a hedge on both sides of the equation is really important when you're building a financial plan. And I learned it the other way, where everybody else, the sky is falling and we're like, oh, well, everybody's flooding to safety and we're doing pretty well. And then, as you have asset management that's been built out, you see the both sides where you also can't be too conservative, where you're giving up growth as well. So I hope that's makes sense as far as that perspective.
Well, it does perfect sense, of course. And I go right back to the farming metaphor and, the whole dynamic between wealth management and risk management. I mean, an enlightened farmer knows that there are seasons, just like the markets have seasons. And when things are walking along, you're in the autumn harvest. And, what follows the autumn harvest, pray tell? Winter. How many times? Pretty much every time.
Yep.
And so the thought that, okay, it's different this time. Okay, some autumns are longer, shorter. Some winters are more severe and mild. But the bottom line is there's cycles, there's seasons. We have to respect that. And that's why I love the wealth management, risk management dynamic, because that is a form of balance. Now, speaking of balance, you can see your backdrop there, do business, do life, which, I feel that. So give us a little backstory on that perspective.
Well, the first time it became a thing for me, it was actually you spoke of seasons. There's seasons in life as well. And I had a season of my life that was coming to a close. I started a financial service firm in 2007, had an awesome run there at 13 and a half years. And it was almost like I was ready to leave the nest. I'd kind of been in the same role and capped out where I could go. And I kind of had that entrepreneurial calling. I wasn't really sure what was next. Triad was not in the playbook at that point, but I basically let one company know, my prior company, that I was going to be moving on, transitioned about $1 billion book of business to other guys that were staying there. And I was hiking. I just turned 40, or I was just getting ready to turn 40. My wife and I were celebrating our 15th anniversary. And so we went to a place called Blackberry Farm. You familiar? Knoxville, Tennessee.
Rings a bell. Yeah, I've never been there.
Beautiful place. Think of like the Ritz-Carlton dropped in the mountains with a forest around you. Just beautiful. Highly recommend. So we're hiking, and it's myself and my business partner now, Sean, and another buddy named Justin out of Texas. And we were just talking. So basically, I was leaving the role I'd been in 13 and a half years. I wasn't sure what was next. I knew it was going to be in finance, most likely. And we were just like, hey, it'd be really cool to just do business with people you want to do life with. Like, it was just a philosophical conversation we were having. And I believe in life, the good stuff sticks. It kind of just, it just sticks in there, and it just kept kind of resonating. And as Triad eventually became a thing, it spoke to me as a person. It was like a selfish pursuit. I've got 3 children. The older I get, the more I realize I've got a freshman in high school. I've only got a certain season in life where my kids are going to be around. And part of that do business, do life was do business with people you actually enjoy being around. It's a lot more enjoyable, both your team internally and also your clients externally. But the other side of that was this integration. And I think oftentimes what happens in finance, it's a tug of war. It's, hey, go crush the business. You're a top performer. You get paraded across the stage at your conference. You get the little trophies. And then I met so many advisors that are just miserable on the other side of that. They sacrificed everything for it. They sacrificed their health. They sacrificed their families. They sacrificed the moments that matter. And a little bit as I was looking, I was making a ton of money, but I was missing the stuff that mattered. I was supposed to be on the road 80 nights the year that COVID hit, and it just wiped everybody's calendar clean. And I really started doing some reflection. And quite honestly, it was looking through my children's eyes, not mine. That really made it a simple decision. I said, success is not make a ton of money and miss all the ball games and family dinners. I'd rather make less money and be there for the stuff that matters. And a lot of Triad's mission is to do that for our team. Keep that integration, make sure you keep the main thing. The main thing, obviously the business serves your life, not the other way around. And do that for our members. A lot of our advisors we work with nationwide struggle with the same thing, where externally, they're a rock star. They're some of the top that do what they do in the industry, but they're sacrificing other things along the way. And what was cool is, as we put this out in the marketplace, it's been pretty wild. It's almost been like a gravitational force that's attracted the right advisors that care about the same thing.
Well, there's obviously, as we all know, an anticlimax that comes with one-dimensional success. And, you talk about the seasons of life. I was very fortunate back in the early 90s to have many interactions with somebody by the name of Jim Rohn. No longer around, unfortunately, but profound impact on me and many people I know. And this is etched in my mindset, is that because he said the number one goal in life is to not see just what you can get and how much you're worth and how much you make. It's who you become. And you throw kids into the mix, especially. And, that old saying, the days are long, but the years are short. It's so true. It just is a blink of the eye. So you don't want to look back. You're fortunate at your age to not be operating with this perspective through hindsight. You're in your prime and you're aware of this. And I think that's what makes you very relevant and impactful within your membership base. So I love the mindset, and I'm going to touch on that in a second, because last time you and I chatted, you recommended a book to me that I've looked into, and it just lines up perfectly with my worldview. But one thing I wanted to ask you, we all know that there is a massive silver tsunami that's impacting this business. Well, in fact, there's actually 2 now, because in financial services in the last 5 years, the emergence of alternative investments, investment opportunities that reside outside of traditional markets and often are in areas generally that an advisor doesn't get compensated for, but are still important to a client. So this whole premise of planning and advice is expanded so dramatically. So if you look at precious metals, I talked to a friend yesterday, pretty savvy guy. And I said to him, I said, you realize precious metals have outperformed the S&P. And it was such an amazing conversation. So there's that tsunami. And then, of course, there's the demographic version of the silver tsunami. I'd love your perspective on these 2 incredibly powerful forces and what that looks like to a financial advisor, where the opportunities, where that bull market is, so to speak, and what that looks like in the next 5 to 10 years through your lens.
Well, first off, I can't let you say the name Jim Rohn without going back and saying, wish I would have, you got a chance to interact with him in person?
Yeah.
Yeah. I'd listened to him through his, CDs at the time where I was driving to and from work, but he had a massive impact on me. And I know he had a massive influence on a lot of people. One of my favorites of his is, you're the average of the 5 people you surround yourself with. I've found to be so true over and over. But to get back to your question, let's talk about alts. I think it's really important if you're an advisor out there to not live with your head in this. And what I mean by that is, the standard, bond equity split, fixed income growth, however you define that as you build a financial plan. A lot of advisors out there, from my experience, they're actually, I'm just going to call it like I see it, rarely are they building an actual financial plan. They're building a portfolio. And the difference between those two, a plan takes in so many more aspects than just market-based. You've got income planning, especially as a retiree. Unfortunately, when you quit working, your job typically does not keep paying you unless you're lucky enough to have a pension. So now it goes from a done for you to a do-it-yourself model. And that's where a lot of people get stuck. Where do I even start? I've got $1 million nest egg, but what now? So you've got income planning, you've got investments, you've got tax planning, you've got healthcare, you've got legacy estate. That's kind of the CFP standard plan. And a lot of financial planners still to this day are just covering one of those 5, which is investments, a portfolio.
Yeah.
First off, if you want to go up the value chain and not be a commodity, don't sell other people's products, build a financial plan, make it specific to your firm. We talked about this in our conversation prior, make it proprietary to you. Don't be a hamburger stand, be McDonald's selling the Big Mac. You can only get it one place. So that would just be my overarching big advice. Now, as we go down into the portfolio alts, all of us have one of these now. It's a super powerful computer in our pocket that actually is more computational power than the rocket that went to the first moon. And so now what that does is that gives every single person that has one of those democratized access to information. And what's interesting, the collectible market has absolutely exploded since COVID. And I've seen this play out a lot of different ways. I fell deep down the rabbit hole of high-end investment grade sports cards. I grew up playing sports. I collected sports cards as a kid. There is a massive wave in the US. I don't know how it's looking in Canada, to where card shows are booming. There are literally 10 million plus funds buying the high-end Tom Brady's, and the Jordans, the GOAT cards, and these cards are setting records every year, million plus transactions. It's almost becoming like private art collection. Now, if I'm an advisor and I have, typically as the net worth goes up, so do the fun things people collect, cars, watches, fill in the blanks. You can ignore that. And odds are that individual is going to find an advisor that actually doesn't ignore it and can speak into it, or you can embrace it. And the way I look at it, just like some do-it-yourselfers like to have their little play money account that they trade in the market, I think allowing some form of flexibility where you don't feel like you have to get compensated for anything and everything is going to be really key as you go into the higher net worth, and call it a little play fund. But now I'm just saying, hey, I see you geek out on sports cards. What do we need to do in your plan to make sure you can keep doing that in retirement? It brings you joy. Just like for some people that's traveling. So, hey, let's make sure we've got an income plan that allows you to check off the bucket list trips, or maybe it's go see the grandkids if they're out of state. So I think just being a human and treating the other people like a human, it's their money, it's not yours, and making sure you take that tool that is money and build a financial plan that actually checks the boxes in a way that obviously there's enough to take care of the other stuff, like paying the bills and all of that. So I'll tell you, we could keep going down that rabbit hole. I can flip over to more of the demographic side of that question, but
well, hold on for a second, because you touched on a lot there. And first of all, I just have to tell you, this isn't a flex, maybe a little, but literally in my office, I have Jim Rohn's weekend seminar on cassette in my office, and I hold that thing like a trophy, that package. So again, cannot, as you would agree, cannot overstate the importance of getting to know Jim Rohn's philosophy and approach, or revisiting that, because it is timeless and arguably even more timely today.
Yeah,
because it's so authentic, and there's so much that's so synthetic in the world today. Okay, so park that. You're totally right. The transactional advisor looking through a keyhole and just addressing one of those areas, they have to adapt. They're on a collision course with obsolescence.
If you're thinking about what moves your business forward, think about the systems and tools that help you operate with clarity and consistency. Our AI coaching program at Pareto Systems helps advisors learn to integrate AI into the work you're already doing, improve your workflows, and free up time for the work that matters. You can learn more at paretosystems.com/AI program. For Always On listeners, there's a 20% discount when you register with promo code ALWAYSON20. Again, that's ALWAYSON20 at checkout. Get structured guidance and make real progress with tools that are shaping the future of advisory work.
With the velocity of technology creeping in and commoditization, it's just going to be merciless. They need a process that everything is wrapped around: advice, service, planning, all of it. Process. You talk about McDonald's. Could you imagine how many burgers they'd sell if they were good? You know, people go there because it's predictable. There's no surprises. You know exactly what you're going to get. So if you could combine quality with process, I mean, how high is high?
Mhm.
I want to tell a little story here about how important this is. And I've told this story before, so if you've heard it, just hear me out. Look interested for a second, indulge me. But I had a financial advisor. We had gone through our referral process. And as you know, we tell advisors, don't ask for referrals, don't pitch it, position it as a service. Don't pitch it as a favor you're asking of the client. It makes you look needy. You can't bring your needs to the marketplace. You have to bring your value. So anyway, he went back and reintroduced himself to a long-term client and all his value-added services. And then he said to him, look, the most fulfilling thing I do as a financial advisor is help people tune out the noise, make informed decisions, and look to the future with anticipation rather than apprehension. Even if they're not a client, if they're a friend of a client, that's still the most fulfilling thing I do. So if you ever feel compelled to introduce someone to me, I'll talk to them. They don't need to become a client. They're important to you. They're important to me. So he went through that with a client, a long-term client who'd never referred anybody to him. Okay? Soon after the reframe, gets an introduction. He speaks to the friend of the client and says, hey, I'm looking forward to having a chat with you. As you know, there's no expectation this needs to go anywhere. I'll be a sounding board. So they got together and he started off just eased in and said, so what prompted you to want to sit down with me? And you could see he told me, you could see this guy was carrying a heavy load, a burden of anguish and, just stressed. And anyway, long story short, he said, my dad passed away and I'm responsible for dealing with all of this in our family. And he said, I knew my dad was doing well. Turns out he was doing extremely well, like shocking. And lo and behold, he said, I always knew he collected coins from around the world. And turns out his coin collection was worth something like, I don't know, say $300,000, which in the grand scheme of things was almost a rounding error, but still substantial. So the prospective client's telling the advisor this, and he said, I sat down with my advisor, and my advisor told me to sell it and invest it. And it just didn't fit right with me. So I talked to my friend who's your client. He told me to talk to you. So that's why I'm here. I just want to know what you think I should do. And the advisor, our client, says to him, he says, hey, I'm really sorry for your loss. That's just impossible to deal with all of that. I'll tell you something. If that's my dad, I'm not selling that. That's his legacy. I'm going to spread that around to the family. And that's just something that's glue for us. So I'm not selling that. And he said it was like the prospective client was like a flower in the sun, physiologically changed right before his eyes. And he said, oh my gosh, that's just exactly how I feel. But why wouldn't my advisor tell me that? And our advisor said to him, he said, I don't know him. He's looking out for you, I'm sure. But at the end of the day, he doesn't get paid to give you that advice. So the enlightened advisor future paces relationships, understands that there's assets held outside of the process, and that's going to increase. That's going to get bigger, and there will be liquidity events. Position yourself so that your clients know that anything outside of your process could one day have a liquidity event, be monetized, and then come inside the process. Just detach yourself from an expectation of when, and just be pure and be process driven, I guess is where I'm going with that. Now, back to the demographic reality, that is accelerating. And I think as more friction and disruption creeps into the industry, it's going to accelerate it even further. So what's your perspective on the bull market opportunity for the enlightened advisor with respect to that version of the silver tsunami?
Just one parting thought on the story you just told. It's on the wall here at Triad. It's one of our core values. Play long-term games with long-term people. And I think a lot of advisors get stuck in the instant gratification game. I get it. We're in businesses. We need to make a profit to keep the doors open. People smell that. They smell self-serving advice over advice for them. And yeah.
Okay, well, I just got to pounce on that for a second because we go right back to Jim Rohn. Jim Rohn said, in your pursuit of making a profit, leave a profit. Make everybody and everything you touch better because of your involvement. And be at peace if you can monetize that. If you can't, it doesn't matter. Like, I wish I had a buck for every time I talked about the Japanese premise of omotenashi, which is just bring value to the world without any expectation of recognition, reciprocity, revenue. That it's just, now, of course, we have to be practical. We have a nut to crack. We're running a business. We're capitalists. But again, do business, do life, not one or the other. The sweet spot, the interlude between that the connectivity of the two together, never having a blind spot one way or the other, they can be in harmony. So I don't know. It's just, I think the more bizarre the world becomes, this mindset becomes a massive magnet because it's an unmet need. It's something that a lot of environments are lacking, and the humanity in us craves this. So if I'm an advisor in an environment that doesn't have that philosophy, I'm lacking that. It's a void in my life. I become aware of it now by virtue of contrast. I'm like, this has served me well to this point, but this is where I want to be. It's in my best interest, my client's best interest, my team's best interest. That's to your point about why you are attracting very attractive advisors because of your philosophy. Anyway.
We can put the demographic thing on the shelf for a second because I have we'll call it a very strong conviction on this topic. And this is coming from a guy when I was 26 years old, was making 100 cold calls a day. And they were to my target demographic was financial advisors all across the US. And I learned really early on, we've talked about Jim Rohn, but Zig Ziglar, one of my favorite quotes from him is help enough other people get what they want and you'll get what you want. And it goes back to not being self-serving, having a long-term view. But I remember the first cold call, I get this advisor on the phone. I'm 26, have no clue, nervous, heart speed. And I was probably hung up on within 15 seconds. Okay, well, next call. And that's really hard emotionally. But what I started to learn and realize is if I opened up a phone call with a pitch that was self-serving, hey, I've got this product, sell this product. You need to know about this product. They would instantaneously tune out. By the way, that applies to financial advisors talking to their clients as well. But when I started to understand, hey, here's an idea, a concept that works for this top producing advisor firm in Austin, Texas. Hey, I know you're in Boston, but I think this same idea can work for you too. Would you be open to me sharing that with you? Now I'm serving them. And what I found is over time, if every time the phone rang and Brad was on the other side, they're like, I don't know who this random 20-some-year-old guy out of Kansas is, but every time he calls me, he adds value. He gets to know who I am. He asks questions to better understand my situation, figure out what's broken in my firm, what problems I have, what I need to fix, takes notes, calls back the next time, says, hey, last time we were talking, I know one of your big issues was you couldn't get enough people to show up at your seminar. I've got another advisor that had that same problem. He did this and he doubled his seminar attendance. Would you be open to me sharing that with you? Yes. So now I'm just putting deposits in the value bank over and over and over. And before long, they felt guilty. Duncan, they're like, dude, I don't do one piece of business with you at all. And you've brought more value to me in the last 6 months than the guy I do all my business with. I need to get some stuff headed your way. So just like you're saying on the conversation with that advisor, that just added value with zero expectation of getting anything in return, done consistently over time with patience, it always pays off. Always, always, always.
Well, karma is undefeated. Now, the universe is not moved by our needs for timing. So it might take longer, it might come faster, but the law of reciprocity that says giving starts the receiving process, especially if pure. The advisors I've met who have embraced, and the wholesalers, frankly, that I've met, that embrace permission marketing. Number one, their mindset is, I will always strive to be interested rather than interesting. Pretty sure that's a habit in Stephen Covey's book, I think. Be interested, not interesting. Be interested in the individual and bring value to them that they actually find to be of value, and then just wait for the cause and effect to activate. It could be immediate. It could be down the road. It's going to come. So that's very powerful. But again, demography, I know we keep parking it, but demography is a powerful force and it's going to create incredible opportunities. We're already seeing advisors that are in their stride with respect to scaling up. You know, the alignment of interest between somebody's lack of a continuity and succession plan, lack of an exit strategy, and somebody that has a process in place to make sure that that person's clients are in good hands, their team's in good hands, their legacy is secure. And because they've earned the right by virtue of their philosophy and process, are scaling up. I think that over the course of the next 5 to 10 years, that opportunity, the window is going to stay open. And I think the opportunity is going to become even more significant. So I do want to punctuate
Let's
that.
talk about it. So baby boomers, I don't know if that's just a US thing. I think it's a Canada thing too. I believe, fact check me on this, I believe baby boomers, that generation was born in 46 to 64. It was the post-war population boom.
Yeah.
Well, fast forward, here we are. My dad was born in 51. He's now 74, I believe. Yeah, 74 this year. So he's probably kind of in the leading edge, but as we get through it, he's a farmer. He doesn't want to retire. But I think he's right in the middle of that group. Hey, they've done well. They've worked their butts off. They've accumulated assets. Now it's what's next. And the best analogy I have for advisors out there, think about climbing Mount Everest. That's most people in life. That is their accumulation years. There's a destination, the summit. They're like, if I chip away at this thing, go to work, think diligently, day after day, someday I will reach the peak. And for different people, that's different things. A lot of people, it's an imaginary round number. Like when I save $1 million, when the account gets to 3 mil, 5 mil, whatever their situation is. But the interesting thing, they arrive and now they have just as much need as before they got there. It's just a different problem. The rules change in retirement. So now they go from accumulation to distribution. Now I've got to make this $1 million, this 3 million, 5 million last as long as I do. I've got this tax situation, typically with IRAs, that's just been deferred. Now there's this ticking tax time bomb I didn't realize I had. RMDs have to come out. I might not need them, but I have to take them out. And so it goes from kind of the easy done for you. Yes, they have to show up and go to work, but the paycheck shows up every 2 weeks. There's healthcare typically included with the job. There's some sort of retirement savings, 401k that's just automated. And I think a lot of advisors, I mean, the world I've lived in has benefited tremendously from this because there's a lot of accumulation advisors out there managing a portfolio. That works great. You know, market dips when you're in the accumulation years. You buy stocks on sale, dollar cost averaging, just keep saving, and it'll all, given time, typically go up in the diversified portfolio. Well, now when you shift, so now I have $1 million. Now I'm a retiree. And now time is not on my side like it used to be. And now when the market corrects, if you go back to 08, 09, why were people freaking out? They had $1 million. They were ready to retire, 4% withdrawal rule, whatever their advisor told them, except their $1 million became 600K overnight. Mm-hmm. So now what's that create emotionally? Can't sleep at night. Do I have to go back to work? Do I have to decrease my spending? Do I have to sell that second vacation home? Do I have to cancel vacations? And so a great advisor is building a financial plan, you know, hope for the best, but plan for the worst. Not hope for the best and plan for the best, because then when it doesn't pan out that way, you're in trouble and you're going to lose clients over it. And so I feel very fortunate. I grew up in a distribution model that was very hedged because we had kind of a very high level philosophy: safety, income, growth. Safety, what needs to be there no matter what, safe and liquid. So think of like a savings account, not making much on it, but it's like that emergency fund no matter what. Need a new roof, need a new car, easy, grab it. 6 months, 12 months, whatever that is, it's different for people. I'll get to income in a second. Growth, that's your typical market portfolio. We all know diversified portfolio given time typically is a great way to make a return. Higher risk, higher reward. But what's often missing is that middle section, income. And I asked a room of advisors, some of the top performing advisors, this the other day. I said, if 100 prospects come into what percentage of them have a written income plan? The highest answer in the room was 5 out of 100, 5%. So back to that Mount Everest analogy, if 5 out of 100 retirees right in that very important window are at that peak and they have no plan to get back down the mountain, the distribution, that is why many advisors are losing clients. They're only dealing with the front half, not an income plan that now complements an investment plan that has a tax strategy overlaying it. Oh yeah, healthcare, that kind of gets expensive as you age and get older. And then, by the way, who do we want to leave this to when it's all said and done? The legacy that we want to leave behind, the kids, the church, the charity. And so when you start to check all those boxes, it's really hard to, I don't think I've heard a lot of sales of objections in my career of almost 20 years. I have yet to hear this objection from a client or a prospect for an advisor. Hey, Duncan, how dare you try to build a custom plan that addresses all my needs in retirement and gets me where I want to go? How dare you offer to do that? Now, what I have heard, I've heard a lot of, I don't like to be sold an annuity. I don't like to be sold a life insurance policy. I don't like to be sold an asset manager. Nobody wants to be sold anything. They want a plan that's custom built to serve them. It's a little bit of a tangent there, but I think when you look at demographics, thinking through, they're now at the peak or nearing the peak of the mountain. Now they need a strategy to get back down, and you need to think a lot less about accumulation and a lot more about all of the challenges around distribution.
Completely agree. The plan is a piece of the puzzle. It's part of the process, but planning is fluid and dynamic. It's the lifeblood, and the enlightened advisor future paces directionally for a client where it's going. And that adds to their fee worthiness, where clients do fixate on what the advisor's worth to them, not just because of what's happened to this point, but because of the piece that I feel of where this is going and my ability to tune out the noise and just trust the plan, stick to the process, and see it through the seasons. So yeah, completely agree. And yeah, I love the metaphor. Planting the flag on the summit, which is in this context, hitting your number, 5 million, whatever it is, that's not the goal. That's a goal.
Right.
They still have the rest of their life to live. And there are consequences. And we've seen between '08 and today, like I've seen videos of people who worked all their lives at GM and then lost their pensions. I've seen videos of people who got to their number and then it, cratered temporarily. And then things simultaneously started to get more expensive, all of these different dynamics. The advisors that have a client who buys into a process and a sound philosophy that's panoramic and all encompassing, it's like noise canceling headphones. They sleep like babies. They tune out the noise. They just see through, keep their eye on the prize. I'm absolutely convinced the next 5 to 10 years are going to be the greatest time to be a financial advisor, let alone the greatest time to be alive. I'm absolutely convinced of this.
Advisors often ask, how do I know where to focus to get the biggest lift in my business? That's exactly what the Practice Management Index, or PMI for short, was designed to answer. PMI is a diagnostic tool built by Pareto Systems to measure the strength of your practice across the 18 key business focus areas that drive growth, scalability, and enterprise value. In just 25 minutes, you'll get a clear snapshot of your strengths and blind spots, plus a roadmap to turn insights into action. Start your assessment today at paretosystems.com/PMI and take the guesswork out of your next move. The link is also in the description of this episode. For a limited time, get the breakdown report for free. Just use coupon code BDR25. That's a $99 value, which gives you access to a detailed list of action items and implementation tools. Now, back to the show.
Fun fact, I do have a immaculate Gretzky rookie card.
Is it graded or is it raw? It's flat, like a PSA where it's got a grade to.
It is very high quality, and it is sealed. I can't remember the terminology, but somebody did look at it, and there's a dot.
Gemmett?
I can't remember, but there's a dot in the right place that I didn't even know about.
So,
not top tier, but it's, anyway, I love that.
Well, Duncan, we can, when we're done with the podcast, accidentally started a card shop, sports card shop, because during COVID, I quit my job and had a couple months with nothing to do. And then I filled a spare bedroom with sports cards. So I can say I've got a pretty high grade investment portfolio of sports cards. I definitely went down the rabbit hole. Got a few Gretzky's, probably not enough, but we can talk about what we need to do to take a look at it and see the value of it if you want after we're done here.
How is it that Kansas City does not have an NHL hockey team? I know you used to. I think, what was it, the Kansas City Chiefs way back when? Or KC? You had a hockey team back in the day before. Oh my gosh, I can't remember the name. But anyway, it doesn't matter. I want to move to something here. I know you're, you buy into the leaders or readers. You told me about a book, The Almanac of Naval Ravikant. I haven't read it fully, but I did go on to chat and ask for a summary. Seems pretty solid. Hit on all the key points of, create a business where you've got recurring revenue, you're making money while you sleep, you've got a scalable business because you're process driven, and then you've got the compounding effect of 4 savings because every aspect of your business is contributing to enterprise value. So on that side, quantitative, practical business development, love it. But I also noticed in that summary that there is a very thoughtful approach to the qualitative parts of life. So what turned you on to that book? And I'm sure that's one of the books that you recommend that your community takes a look at.
Yeah. Well, you mentioned Jim Rohn, so I'll go rabbit trail backwards before I get to Naval. One of his biggest students was a guy named Darren Hardy.
Mm-hmm.
So Darren Hardy was the former publisher, and I don't know if he owned it, but he definitely had a lot of influence. Success Magazine, if you remember that one, used to have this audio CDs that came with it. But Jim Rohn was a massive influence on him. Darren Hardy, this would have been the first year or two of my career in finance, wrote a book called The Compound Effect, which was a lot of Jim Rohn's lessons that he had shared, that he reshared again, and I read as a 20-something-year-old. And one of the lessons out of that book was the average human, based on their normal drive time during the year, could have the equivalent of a PhD in 2 years if they just educated themselves on their car rides versus just listen to the radio. And that was where I was listening to Jim Rohn audios. I was listening to podcasts. I just had a rule. I was going to feed my brain and learn and be a student instead of just like listening to sports talk radio. And on that, one of the earliest podcasts I listened to back in the early days of podcasting was the Tim Ferriss Show. And he had Naval Ravikant on as a guest. And Naval had been a very successful angel investor, Silicon Valley, had invested in Uber, Twitter, a lot of the unicorns in the early days. And he was kind of sharing this story on the podcast, which, side note, made to do some investments on Angel List that a few of them treated me very well just from listening to a podcast. He just has a way, he's a very intelligent, well-read guy, and he has a way of like kind of breaking down really complex things into simple, kind of pithy little sayings. And the crazy thing about that book, he didn't write it. Kind of like the Bible. Jesus didn't write the Bible, just people wrote down his stories. That's how the book, The Almanac of Naval, was written. A guy named Eric Jorgensen in Kansas City. And he just took his podcast, took his Twitter posts, took his blogs, and just put them into this book. And I will say it's so good. It's sold a ton, but it's kind of, Naval has the skill of, he's very wealthy, done very well for himself as an entrepreneur, as an investor, but he hasn't let money consume him. Kind of his version of DBDL is how to get rich and stay happy. And there's a few different frameworks that really hit with me out of that book. There was a thing that hit home very close to DBDL. There's two ways to be wealthy in life. Number one, you can get everything you want. Or number two, you can want everything you have. And that one takes a little bit, you have to like process it. But I think a lot of people are guilty in this life of keeping up with the Joneses. Comparison's the thief of joy. I got here, but now I need to get here. I need a bigger house. I need a bigger bank account, better car. And I've found those to be some of the most miserable people in life. I mean, they're very self-absorbed. It's never enough. And if you look back, like my family saw the exact opposite of that this summer. We took a trip to Africa. We went to a village in Kenya, middle of nowhere. The first memory, we're driving down this bumpy dirt road, and over in the ditch water, there's a lady washing clothes. And you just sometimes forget to zoom out and have perspective and realize how blessed you are, even on the worst business days, as an entrepreneur, as an advisor. And I saw firsthand what the second one means. Want everything you have. These were some of the happiest humans on the planet, such a sense of community. They had nothing. They lived in mud huts with no electricity. They had to have a roof that gathered the water and went into a tank for their drinking water. But yet, soccer ball made out of plastic bags wrapped in twine, and just the most grateful, loving humans on the planet. And I think, over here in the Americas, we've done ourselves a bit of a disservice sometimes because we've got everything and we're some of the most unhappy people on the planet because we don't have that perspective or we forget it. And so that's just a piece that really hit home from that book. There's all kinds of other lessons. Great book. There's a section on how to get rich, which is a lot of leverage and building a business and how to invest and how to think about that. The other side of that book is how to stay happy while you do it.
There's a Canadian musician. He's unfortunately passed away, but his name Gord Downie, and he wrote a book called "I Can't Be Nashville Every Night." And there's a line in that song. It says, "We are what we lack." And if you really think about that, the people who are unhappy and unfulfilled are generally lacking faith, gratitude, humility, contentment. There's other things too, and I don't mean to oversimplify this at all.
Yeah.
But for me, the takeaway there was take nothing for granted and fuel your aspirations with intense appreciation. Because, like you, I've traveled extensively, and I'm pretty sure 90% of the world would kill for my worst day. So complaining and, I know there's a time to, you know, kind of just immerse yourself in what you're going through. But at the same time, yeah, anyway, just a good philosophy. And, in our approach, the blue square method, that ikigai, that's such a fascinating study. The ikigai of which basically means our reason for being is, gratitude, fulfillment, purpose, balance. One thing doesn't come at the expense of the other. Our success doesn't come at the expense of somebody else. It's through the service of others. And it just on it goes. It's just
Naval talks about that, Duncan, the abundance mindset versus the
Yeah.
scarcity mindset. He talks about politics, which there's a lot there, but he talks about the issue with politics. It's a zero-sum game. In order for this person to win, this person has to lose. And in business, that is not the case. There is so much abundance out there, but the people that approach it with the scarcity mindset, I've seen it. You've seen it. There's the abundance mindset advisor. There's the scarcity mindset advisor. The thing with the scarcity mindset advisor, it's never enough.
You know what I'll say?
It's all going to crash the next day,
Well, and from, back to the point about politics, there is such an awakening occurring right now where people are starting to realize who the bad actors are and what their tactics are. I think there's going to be a renaissance where all of that is going to be revealed. I think it's going to be a little bumpy. Like the seasons in life, there's storms that appear, but I think there's going to be just a phenomenal next chapter around the corner. So in the meantime, we just got to enjoy the show and keep our heads down and do no harm, right? Just keep bringing value. And hopefully this was valuable to anybody happening to listen in. And Brad, you're a really thoughtful guy, and we're simpatico in our worldviews, which is exceptional. I love that. Just the law of environment, such a powerful force. So how can people get to know you better? I know you're on LinkedIn, but if somebody listening in wants to track you down and pick your brain and just get to know you better, what's the best way to do that?
Well, I'd say the easiest is the podcast. There's a lot of conversations where, we'll have an episode coming up and you're just that's probably the easiest way to plug in. So it's DBDL podcast on just about every platform. BradleyJohnson.com is where all the episodes live. If you want the video version, the audio version, the transcription, team does a great job of pulling out all the show notes to add resources where you can dive deeper on any guests that I have on. The company, triadpartners.com. So we run an insurance brokerage firm. We run a wealth management firm. So if you're here in the US and a philosophy that you believe insurance is a big piece of the plan, that's really philosophical, our approach. And here to serve. Love conversations like this, Duncan. So thanks for having me on. Always enjoy getting into real deep conversations where we actually think and don't stay surface level. And I can tell you're definitely that type of guy.
Excellent. Okay, so 2 personal questions. I'm just curious. Number one, your watch, is that a Panerai or is it a Monaco? What is that?
It is a Carl F. And I always butcher this. I think it's Bucher. It's a Swiss watch. It was a gift back in the day. I had an Apple Watch for a while, trying to stay active and, you've got all the health tracking, but it was just too distracting. I kept getting all these pings. So I went back to go to old school analog here, and it's treated me well.
Yeah. And I think there's good energy in the precision of a Swiss watch. That's a good metaphor on business, because I always say you want your business to run like a Swiss watch. Whether or not you're there, you don't have to be present for your business to be productive. Okay, so that's number one. Good to know. And that's a great brand. You don't happen to be related to a Derek Johnson by chance?
There's a lot of Johnsons out there. I don't believe so.
Okay.
I don't believe so.
All right. Well, listen, I've tied up a lot of your time, but thank you for investing your worldview on the Always On podcast. And next time I'm in KC, I'll definitely track you down.
Let's do some barbecue.
Absolutely. Okay, buddy.
Thanks.
Take it easy.
Thank you for listening to Always On with Duncan MacPherson, where our objective is to enable professionals to always be working on their business and on themselves. Want to learn more about Duncan and his team? Visit ParetoSystems.com. Don't forget to click the follow button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the hosts and/or guests and does not necessarily represent the views or opinions of Pareto Systems. The content has been made available for informational and educational purposes only.